shifted to India. It has taken a year for them to sort out the things, settle down properly, and avoiding any further notices from any of the residency, right? So plan before you move, not after receiving a tax notice. Okay. Because in October, if you're moving, how many number of days you're residing in India, being a US resident now, that is all number of days count is all going to impact your tax filing drastically, right? So he asked, have you checked how your return date will affect your Indian residential status? Rahul was like, no, I did not plan about it. Being a family man, I just planned about the family things, but I have not planned anything on the finances part, right? So like Rahul, we have many NRIs who are planning to return to India without thinking or without doing a proper tax and financial planning. They live outside India for many years. They will continue to remain NRI for some time, even after returning to India. When they come to India, they will have to spend specific number of days after you plan, and for other part of the year, they are non-resident. Yes, there was a question on the calendar year. Yes, the tax year is considered as calendar year. Yes. So Rahul now understand that immigration status and tax residency both are connected, but they are not always the same. There are two different things which are connected in this concept, but they are not the same. So immigration status is different, tax residency is different. Okay. Now what is next? All the questions report it to both the government, because the fact which matters a lot is where employee physically perform the work. And here the employment is performed from Bangalore, India location, right? So it doesn't matter which bank account it is received, what currency it is paid, what contract was signed, who is the employer. It's what matters in the taxation cases where the employee physically performs the work. Okay, so physical location wins. Yes, so all these things we are asking the employer, and the questions will be that the decision to continue working from India affects both and Rahul and his employer. The reason is because one party is taking deduction in US records and other party is reporting income in the Indian records. So in both places, it is recorded, right? Next question comes, annual bonus. A few months after moving, Rahul receives 30,000 of annual bonus, right? So this is another question. Till now we were discussing on the salary, how it will be taxed and all. And now the another question comes that he receives 30,000 of annual bonus. So how it will be taxed? Again, the question comes, how it is paid? It is paid through US payroll. Where it is earned partially. He had to do in the next few days. The location from which he worked each day, business travel date, vacation and leave plan. All these things he started recording it. Okay, he started recording all these things because a small record becomes one of the most important document in a cross-border return. Anyways, I always tell my people, whether it is my client or my students or whoever is in my networking, we all are in the tax industry, and it is very sensitive. When we talk about the taxation, it is a sensitive matter. We are required to maintain the records very, very much in detail. A small missing document can put you in penalty. Okay, so you need to plan things properly and need to maintain the records of every single small. Before leaving your job or moving out of United States, it is very important. Some of you, if you want, you can go with the slides. We'll be uploading this on the YouTube later, or you can make a note. Okay, it is very important that before you leave the job, or if you leave United States, any one of these, okay, you need to maintain these records very, very neatly, clearly. Okay. Download all these records because portal access will not be always available for you. Right? Okay. Does that mean we are paying taxes twice? No, that's what I just spoke about, the dual tax agreement, avoidance agreement, DTAA, which is again known as a tax treaty benefit. Right? So credits are not automatic. You need to report it. So you won't get a. So we spoke about a lot of things here. We spoke about the shares, we spoke about salary, bonus, but we forgot to talk about the last benefit which Rahul was receiving while being in the employment in the US is employer-sponsored retirement plan, right? So before moving to US, his friend suggested him that you should withdraw your entire retirement fund. Once you move to India, it will be difficult for you to access this fund and get the money. So Rahul was like, okay, I have approximately 200,000 in my retirement account. If I take a full distribution, there will be hefty taxation I need to pay, right? So fortunately, he stopped and looked for the professional advice to his advisors. What he learned from this process that moving to India does not necessarily require him to close employment plan. Okay, this may be done later. She picked the fund for its Indian tax treatment. Nobody checked its American one. So when she took the advice of the people, she just picked up some of the mutual funds, but she did not pay attention that she's a US citizen. So end of the day, this non-US mutual fund investment will go into passive activity rule. Okay, and the passive activities will have a different tax treatment. They can create complex US reporting. They will require more filings or unfavorable tax calculation or compliance cost. Including all these things, she is going to end up paying more to the US government, right? So whenever advisable to people, when they shift back to India and they want to invest into the passive or mutual funds from their savings, do check it properly from your almost after a year leaving the US, Rahul gets a letter from California. California was the state where they were residing. So he gets a letter from California state tax court authorities that they were asking him that if he is still a resident. Because he did not inform the state government for his movement out of US, the government was still checking on his, status, whether he's a state US resident still, whether he has an active account, active residential address, so they are going to check it. State government will not automatically come to know that you have moved out of US. You need to inform them as well. Nothing happens automatically. So what was happening? The government was checking on the residency, or the other facts that if they can still impose any kind of user fees or residential status fees on those people. Okay. So that's why he received a notice. All these facts. What Rahul and Priya would do differently, their residency, their return date, employer should be informed, review the final salary and leave payments, download all the documents from the employer portal, maintain a detailed travel and work calendar, review all your retirement plans, collect all your prior filed tax returns, processed tax returns, right? Properly document your termination of state residency as well. So this is a complete checklist which anybody would need to do when they are